What's up, everybody? Michael Silva here. Today's video is about understanding the market structure and where we stand in it. Look, the stock market has been systematically getting taken apart. It's been getting dismantled recently. So we are going to take a look at many charts today to really help us understand the greater picture of what's taking place so we can prepare ourselves for what may come. Let's get into it. Welcome back, everybody. We're going to start off here back at this specific chart from Brian Shannon's book, Technical Analysis Using Multiple Time Frames. He has a very good graphic here explaining the 4 stages of market structure, and that's accumulation, markup, distribution, and decline phase. I want you to think about where we are as we go through these various different charts. We're going to be looking at the FANG stocks, we're going to be looking at the indices, and we're going to be looking at some other very important charts that have to do with our overall economy. Okay, so let's just get into the Nasdaq Composite. The Nasdaq Composite has been on a monster run-up since the 2020 pandemic, and you can see here I drew out a trend line that you'll be noticing on a few charts here. It acted as resistance, 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 support, and it's been acting as support here on that final drop. Now, we were down 2.63%. This is crystal clear as day that if this trend line gives way, it could then become another time period of resistance. Now, where do you think that we stand overall in the market structure? Well, this was definitely a period of markup, right? And this could be period of distribution, right? There seems to be distribution type days when you take a look at the volume, but we're still holding this overall trend. So if this starts to get cracked and the moving average start to really curl itself over, which is what I like to use for understanding the market structure, right? If you just take a look at, the moving averages, the 10, 30, and 40, or just the 10 and 40, you can see that they're all going up, and now they're starting to flatten out. So we have a markup phase, and this is possibly here an area of distribution before they might curl down further to turn into a period, a decline period. Now, look at the Wilshire 5000, a broad view of the market over here. Also, resistance, 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 holding as support. What are the moving averages telling us? Well, they're starting to flatten out from a nice period of moving up. They're starting to flatten out here. So this could very well be a period of distribution. And it could be very well moving into a decline phase. So we got to watch this trend line to see if it's cracked. The IWM. The IWM is an incredibly important part to just keep an eye on. It resembles our economy very well. Small cap stocks, how are small businesses doing? And you can see here a huge markup phase. Then we went sideways for quite some time, and now the moving averages are starting to slope down. So what do you think is taking place? This could be markup, this could be distribution, and this could be still a period of distribution here before the decline phase takes place. So that is what I'm watching. What do we need to see change? Well, we need to get back above those key moving averages. Right now, it looks like it's flagging to the downside, and if it starts breaking down, we had clear resistance here, we gapped up through that. If it comes back here, that could be very well a great entry point to start getting a little bit long on individual equities there in the small cap section. But we'll see if it actually wants to fall that far. That would be a pretty dramatic move to the downside. Let's take a look at the SPY. This resembles the S&P 500 or the SPX. Resistance, 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 support right here. We had this huge markup phase, and now we're starting to see price action get way, way, way out of control over here, where the moving averages are starting to flatten out. So the bulls, they can very well still step up. But what does this look like to you as far as the market structure goes? It does seem like we're in a period of distribution. And remember, distribution could take quite some time. Remember the IWM. This was going from 2021 basically to the end of 2021 for an entire year. And if this is distribution, you need to think, okay, if you're looking at hedge funds, institutions, if they're getting out of positions, okay, if they're getting out of positions, they take a year to get out of positions. What makes you think that if price goes up right here, they're just going to want to get right back into those positions if it took that long to get out? So this right here is a lot of trapped supply that we need to be very, very mindful of. If we take a look at the Dow Jones Industrial Average, another trend line to watch, resistance, 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 support, support, and resistance right here. Overall, still holding up relatively well, but you can see the moving averages are starting to flatten out. So right there, we had that nice markup, and now we're going into that sideways price action, which could very well be a period of distribution before we see the real decline. If you take a look at the Qs, very same situation, right? trend line, all this resistance, then it turned into support again. Now you're starting to see those moving averages start to flatten out to decline and start to cross over. The bulls are still holding the trend line right now, but it's something to be very mindful for, right? If you are a trend trader, you need to trade with the trend. And if you're in a period of distribution, that means you're going sideways. And really that means you got to be a channel trader at that particular point in time because there is no trend. This right here, it made sense to buy all the dips, boom. But now, does it make sense? Well, when we're in a stage 2 markup, that is buying the dip. But if we're in a decline phase, that's not buying a dip. That is called catching a falling knife. Now take a look at the ARK. The reason why I'm showing you ARK Fund is because of what happens when these big trend lines are broken, right? Support, resistance, resistance, resistance. It acted as support. And then we cracked, and look at this thing from 95 down to a low about 50, and now we're starting to bounce around. But take a look at those moving averages. They flattened out, and then they started curling massively over. You know, it's not going to just recover overnight here and go all the way back up to 160. This got completely dismantled, and you could see it clear as day. Stage 2 markup. This was accumulation. So 1, 2, 3, and then 4, right? So that right there in itself is a perfect example of what market structure looks like, and it's following it to a T. So is it time to buy ARK? I mean, in my opinion, no, it's not. Could it come up up here? Yeah, sure. But that can just be part of a bigger decline also. You'd want to start accumulating it when you start to see an accumulation phase, accumulation stage start to take place. And that would be when the moving averages head lower and they start to get close to one another like this, and you start to see price action move around and you start to see volume spikes. That would be more of an accumulation. And it just seems like we're pretty far off from that right now. Transports. This is where economic plays come in. It's incredibly important for the economy to see transports perform as well. And you can see here, we had an accumulation stage going here, but then we had the pandemic hit. Okay, but they obviously quickly recovered, markup right here, stage 2 markup, and now it seems like we're in a period of distribution. I'm long the transports right now. I played a channel trade, and I'm up in the position right now, but to be honest, when I look at the daily time frame, it actually looks like it's a bear flag, looking like it's going to retest the low of this channel or potentially break down. So I'm considering hopping out of that, or at least taking some partial profits in the meantime. Okay, so transports are incredibly important, especially if you look at Dow theory. Semiconductors, another huge component of the Nasdaq, and incredibly important to see other growth stocks perform. If you want to trade growth stocks, right? Semiconductors are a big part of that. And a big part of the semiconductors is, a stock like TSM, NVIDIA, right? And those ones have been getting systematically dismantled as of recently. So yes, we've been in a stage 2 for quite some time. I would consider this all pretty much a stage 2. This would be an accumulation. This would be, just looking at the moving averages, a markup phase. And now what you're starting to see is the moving averages and the price action goes sideways. Okay, and we're under all these key moving averages. So the longer it stays there, the more distribution that can take place. And it was not a good week, right? Down almost 3% on the week. It's been getting just completely hit. But as you can see, price hasn't gone anywhere since, the beginning of 2021, which tells me this could very well be a period of distribution, and we could be heading into a decline phase. It's early to tell right now, but this is what's going on. Okay, it's not to predict anything, but if you are a trend trader, once again, the trend is just not there. It's not here right now. All right, so if you can survive, right? If you can survive how 2022 has been playing out, and you're a trend trader, you are going to be incredibly good trader, incredibly good. If you can make it through this difficult period in time. I tell you what, I promise you that, because there will be more markup stages, and there are various industries right now that are doing superb. I actually talked about it in my prior video. Look at the housing index. Another incredibly important part to our economy is to see how housing is doing, and you can visualize it right here. Markup. And this right here, period of distribution. Look where it peaked. It peaked in May of 2021 and hasn't actually clicked that, reclaimed that high. And you can see, like other various indices like the S&P 500, it did go higher. Nasdaq Composite, the Nasdaq, they all went higher. But the housing market has been getting dismantled. And this could be distribution, and this could be the early stage here of a decline phase as we're below all those key moving averages. So be very careful here, because it's obviously, I maybe shouldn't say obviously, but it's incredibly important. Now, how can we really start to continue to sell off? And if so, I mean, we've already sold off so much, including like funds like the ARK funds, the Nasdaq Composite already hit down to around down 20%. So what can happen next, right? Where can we get dismantled? Well, take a look at the top holdings of the S&P 500. These are the FANG stocks: Apple, Microsoft, Amazon, Facebook, Google, Tesla, Nvidia, and a couple banks there too. Okay, so if we go through these, take a look what's already been hit, right? So first and foremost, Facebook. So this I'm giving you the example of, right? If Facebook can get hit like this, I'm thinking that other stocks in the mega caps can too, obviously and clearly. Okay, but let's take a look. Apple has not get hit at all. All right, and Apple is the most liquid stock out there, I believe. Okay, and this has been in a markup phase. It hasn't really gone through a period of distribution yet. At least it doesn't seem like it, because we're above all these key moving averages. We're getting a little choppy price action right here, but the moving averages are still up. So if you are a trend trader, this one would be the mega cap stock that you'd want to kind of keep an eye on, right? As momentum, though, is slowing down. It's continuing to just the PMO, it's starting to head lower, and this is starting to head higher, which is giving us early indication that, hey, the rate at which this has been increasing is slowing down significantly here. If we take a look at NVIDIA, NVIDIA is another big component, and you can see here, we talked about semiconductors already. This is getting it very well period of distribution as the moving averages are flattening out, and we're below all of those on a weekly basis. Google, look at how far Google has moved. Look at just how incredibly big it was from the 2020 pandemic. It went all the way up to around 3,000, and you can see it was just in a beautiful uptrend. Beautiful. But what is this right here? This right here is a period of either distribution or just a pause before a bigger move, right? A potentially accumulation. But to me, just looking at it and how the moving averages are curling over, and you're starting to see some distribution type days within the volume or week, it does not look good. That doesn't mean that it can't change, but this could be the early stages, and you got to understand, if Google starts heading lower and cracks down and starts heading back to around 1,500 or 1,600, 1,800 even 2,000, the market is going to have an incredibly hard time moving up, especially the S&P 500, especially the Qs as well. Okay, that is just what is happening here on this specific chart. Take a look at Microsoft. Microsoft has been in a beautiful uptrend, but what do you notice taking place? All the moving averages are starting to flatten out, starting to go neutral. So this can just bounce around for quite some time. But if this goes into a decline phase, look how far it could potentially fall. Look how far it's came since the 2020 drop-off here. Imagine it coming back down to 200. Imagine Microsoft going back down to 200, what that would do to the markets. You have big dogs, Google, Microsoft, right? That would do some damage. If you take a look at the next one, let's look at Amazon. Amazon hasn't gone anywhere for a very long period of time. You can see back to 2020, mid-2020, it has not gone anywhere. If you look and understand market structure, that was a beautiful markup. This right here could be a long period of distribution, right? And it could be flagging right here, and it could be breaking down, going into a decline phase. It's all giving us warning signs, especially to swing traders and trend traders. You need to be very aware of what's going on right now with the big stocks, okay? Netflix did get dismantled. So if you think big stocks can't get dismantled, take a look at Netflix, take a look at Facebook, take a look at ARK, right? Tesla is an incredibly big component of the ARK fund, and they just put out a study saying that they are planning on, I think in 2024, 2026 or something like that, being $5,000 or $4,000. I don't know. I didn't read too much into it. However, I will say that Tesla is actually obviously clearly one of the stronger ones. The moving averages are still sloping up. All right. Yeah, it's been seeing very volatile swings back and forth, but as you can see, it's still within a relative uptrend right now. So if these moving averages start to flatten out more as time progresses and we start cracking below these key levels, this could look more and more like a period of distribution. But as it stands right now, Apple and Tesla are the stronger ones out of that group. So if people start attacking those stocks, if the big hedge funds start getting out of those stocks, the institutions start moving money out of those stocks, it's going to be a difficult time. And now, when you think about this, right, the 60-40 portfolio, you can see here how much the 60% can start getting dismantled just by looking at these big equities. But if you take a look at that 40%, which typically when these get dismantled, you have bonds perform, but that hasn't been the case. You look at the TNX, and the TNX has been exploding, just blowing up the bond market. That is by far the biggest news here, is to see the bond market just getting absolutely and utterly obliterated. And you need to understand, if this keeps on this rate of change, what do you think what is going to be affected? What's going to be affected are these big tech stocks. Big tech stocks, you think about this. As the rates go up and they start exploding, And you see these big tech stocks that typically do stock buybacks and so forth. Well, if it becomes more expensive to do that, right? They're not going to do that. And a lot of these stocks have been relying on these stock buybacks in order to start continue to perpetuate their gains and move the price action up. And it just has not been taking place, or might not take place, I should say. Okay, so this right here is just, it's going to break something. It will break something, and we need to just be very mindful. Now, it could come off, and it could come off hard and fast. My target is 3%, but if it starts getting even past that, holy moly, you got to be careful here, okay? And not even to mention just the big tech stocks, but think about the financials, right? The banks. Banks, they typically do good, right? When because they borrow short-term, they lend long-term, right? That's how they make their money here. But if you take a look from a price action perspective alone, looking at the BKX, which is the 24 largest institutions here, resistance, resistance, resistance on the monthly time frame. PMO is starting to curl itself over. And look at these high wave candles right over here, kind of looking like a parabolic sort of like kind of little blow off right there. And we're coming right back. Now, this could be a back test and we start to head higher, but I mean, it's not looking good. And look at the dates every time that this is hit, right? 2020, that was the pandemic. Right here, 2018, we had the whole repo fiasco. And right here, this was the financial crisis. So if we start coming back within this area and the financial institutions start breaking down, none of it looks good. None of it looks good. So we need to be very patient. There's very few trends that are happening right now in the markets. And the trends that are playing out right now are all very safe, protective trades. For example, gold. Look how this looks different, right? This was a markup phase. This looked like a period of distribution. But guess what? This very well may continue to rise, right? So that can happen also to big tech stocks. So there's a positive sign to all of this, right? Especially if you're a growth trader, but it's above the key moving averages. The PMO, it's starting to curl itself up, which is something that you don't see really in the tech stocks right there and right now. And this is all moving up, which could very well tell us that, hey, gold could very well just fire off, which could be the safer play to be in this quarter and potentially into the year end. Silver doesn't look as good as gold, but it is, recapturing this period of, this distribution type area, which seemed to be that it's been going sideways forever, markup, and it's taking a lot of a breather, but, PMO curling up above zero. So this is also one to watch as it's above those key moving averages. And then the US dollar, if that doesn't tell you anything, a flight to safety right here. It's above all these key moving averages, continuing to head up. It's been getting very, very strong. And it looks like it's a flight to safety right here as we're starting to see other things start to get dismantled. And if you just take a look at the safety ratios, once again, so we're looking at gold over SPY, XLU, utilities, consumer staples, TLT, defensive, and XLV. So TLT, bam, bam, it completely again dismantled. I think on a very big risk-off event, we can see this pop up still because sentiment is extremely low. But as you can see, everything else across the board, where is money rotating into? It's rotating into healthcare, which is what? It is defensive. Defensive ETF here is defensive, right? Defensive stocks. Consumer staples, more defensive. You're seeing stocks like Walmart trade like a meme stock. All right, it's going vertical. XLU, utilities over SPY, starting to move higher. Gold, right? All these are going higher. Now, I want to wrap this up in the conclusion section, letting you know that even if those are going higher, those too can get dismantled during times of high volatility. So if the VIX fires off and starts getting back above 30, you're going to see utilities take a big breather. You're going to see consumer staples get hit. You're going to see other assets continue to get hit. So that's all I got for you on today's episode. I know it probably sounds bearish to a lot of people, but it's not meant to be bearish. It's meant to just give you insight as to where we are in the market by visualizing where we are actually in the markets. We're looking at price action, and until that changes, we need to be just cognizant of what is actually taking place. Hope that helps out. See you back on the next one.